Noah Greenhill, the Head of Marketing and Business Development at the JSE, is our guest this evening on Mansfield's Money Sense. We're talking about IPOs, the first sale of stock by a company to the public. We've looked at the company side of it. Let's look at the public side of it now. Guys like you and me who want to buy those listings. How do you know that you're buying debt or equity?
Okay.
Because surely some of these people come to the market because they need to raise capital.
Yes. So here's the interesting thing from an investor perspective. In South Africa, the last IPO that we had, in the truest definition of the term, was Telkom. So they were the last guys that went to the marketplace, to the public, and said, come and buy shares in this business. Post that, all of the listings that we've had have been what they call a private placement. Now, there's a nuance between an IPO and a private placement. The only difference is that in a private placement, the company decides who their shareholders are going to be. So they might go to the larger stockbroking players in South Africa and say to them, listen, we're representing this unbelievable business. We'd like to offer shares to your clients. Would you be interested in taking up those shares on behalf of your clients? And they either buy into the story or they don't buy into the story. Okay. On the question of debt versus equity, yeah, there might be debt in the business. But when it's coming to the JSE as a company doing a listing, they're selling shares. It's equity. Their balance sheet might have debt on their balance sheet, but at the end of the day, that's for you and I as potential investors in that company to do our due diligence and assess whether or not that company has got the kind of growth opportunities that we'd like to see in putting our 100 Rand into that business.
So as an investor, you as the exchange will offer me a full disclosure on that company.
That's exactly right. So what we offer is that the company has to meet certain criteria to list on one of our boards, whether it's Altex for small to medium-sized companies or the main board for the larger companies. And each of those have certain admission requirements that the company has to tick in order to qualify to list on those specific boards. And that should give you a sense of comfort that the company has been through a couple of hoops to get onto the market. But let me just make the caveat. It's never perfect. Companies fail.
Yeah.
Companies fail for fundamental reasons. The oil price changes, interest rates change, a new competitor arrives on the scene, management retires. There's so many reasons why companies fail. That's often not a function of the listing. The listing is the ability to raise the capital, raise their profile, and take their business to the next level. The guys still have to worry about the business.
I was reading, I don't know, a few days ago, somewhere, I can't even remember where. There was a big debate going on about this possible listing of Facebook. And people saying that is there not a bubble that's being created here? What's your opinion on that? Where are we going with this whole social media stuff? Because to me, I can't see, maybe it's because I don't understand it, but to me it's all airy-fairy. You know what I mean? I need things I can see.
And that's the key. You need to decide what the revenue model and profit model is on these businesses. The reality is, the companies, you take the Dow Jones Index. Dow Jones Index has 30 companies in it. Every day, everybody listens to radio programs, TV programs about what the Dow Jones Index has done or is going to do. 30 companies.
Is that all they've got?
That's it. 30 companies is in the Dow Jones Index, and yet that is the barometer for the world's equity markets. Now my point is that the constituents of the Dow Jones today was not necessarily the constituents of the Dow Jones of 20 years ago. or 40 years ago, or 60 years ago. So who knows? Facebook, with their current model, might be a constituent of the Dow Jones Index
in 10 years' time.
In 10 years' time. Because maybe that's the way we communicate in 10 years' time. They're already a multi-billion-dollar business. So they're already, well positioned to be one of those companies that are going to be one of the big companies of the world. But at the same time, look at companies like, and off the top of my head, I can only think of the obvious ones, a Lehman's or a GM or a AIG, that were not 2-3 years ago, were the role models, were the aspirational type companies that in any blue chip portfolio, you would see those names. And look where they are today.
Okay, but now, this is just fascinating me, and I want to sidetrack here just for 1 minute. The Dow Jones, do they choose which 30 companies are listed on them?
No, it's constituents of the top 30 largest companies on the New York, or in America.
Oh, okay.
Yeah.
Okay, and that creates that index.
And that creates that index.
Okay.
So
it's the same as you guys do with Satrix 40.
Correct.
You take your 40.
Good.
Okay.
So in South Africa, you could argue that the top 40 index, which represents probably between 80 and 90% of every metric you want to look at, whether it's market cap, whether it's volume traded, value traded, or number of trades, is probably represented in that top 40 stocks. That's 80-20 principle applies on every exchange.
Okay. Now let's go back to these sort of companies. You were mentioning in the break. You started telling me about, was it Glencore?
Glencore. So Glencore was a private company for the last, I think 20 or 30 years, run as a partnership. So, and they're in the commodity space, and a whole lot of guys got together and started wheeling and dealing in the commodity space, and they built a multi-billion rand business. Now, they got to a point where they could not continue funding that business, either via the banks or via private equity.
Okay.
And if private equity did come in, it was going to be very expensive money. They had to go to the markets, which they did do. They're now a public company. But now the reality is they were a very secretive, very tightly held business. They're now in the public domain, and the business has changed. But I think, and obviously I admit I'm biased, it has given them leverage to take themselves to the next level. It's given them now a profile where everybody's talking about them, where there's much more disclosure, where there's much more transparency, and perhaps maybe you're not going to see it now or in the short term, but perhaps there are guys now that are prepared to deal with them that weren't prepared to deal with them in a closed, secret, partnership type environment.
But hang on, having said that, surely by being thrust now into the public domain, every move they make can be watched by everyone, including their opposition, who are going, okay, well, if those folks are buying there, then maybe we should be buying there, because...
Absolutely, Jeremy, that's an argument I get all the time. And my response to that is, if you're telling me your competitors don't know what you're doing, whether you're listed or whether you're unlisted, well, you're living in cuckoo land. Your competitors will always know what you're doing. Yes, as a listed business, they might know a little bit more. They'll now know, as the CEO, they'll know what you are paid. But that can't influence your ability to raise capital, grow your business, do acquisitions. I mean, let's take a business, a small business that's an Esau Frankie. Esau Frankie was an 80 million rand business when they listed on Altex. They acquired a business not a year later that was slightly larger than them. Now, my contention is, and it's a hypothesis we can't test, had Esau gone to Frankie at the time as an unlisted business and said, hey guys, we want to buy you, smaller than them, I think Frankie would have laughed at them and said, are you mad? We'll buy you.
Buy you.
Absolutely. As a listed business, it gave them a little bit of leverage to do the transaction that has catapulted them from being an 80 million rand business to now doing turnover well in excess of R1 billion. That to me is a success story. That to me is partly attributable to a listing on the JSE. You can never directly attribute those kinds of things to just the listing.
But you're going to take credit where there is some credit to take.
We try.
Let's just come back to this, because we sort of sidelined off there. Come back to this whole social media thing. What are your feelings on it now?
Yeah, look, I think, I am not yet. I have just ventured onto LinkedIn. I think it is becoming all prevalent. I think if you're not there, you're just not in the game. And I think that's where we are at this moment in time. I think more and more people are active there. I think more and more people are communicating there. I think more and more people are learning things there. I think more and more people are going to start transacting there. I'm not necessarily sure we're at the transacting phase, but I think we're getting there. And once we get there, that's a world in and of itself. And that's the future. It has to be.
I just don't know where you put the value, though.
Well, that's the challenge. The challenge, the communicating for free between this party and that party, there's no value in that. But it's the message around, I don't know, whatever it is. A business school, an education course, a job opportunity, a coupon to buy milk.
Yeah. Yeah, it's all those unknowns that could possibly come out in the future where you go sit back and you go, damn it, you know what, 2011, I should have bought that one.
That's right.
Yeah.
And the reality is, let's look at TV. When TV started, had you suggested to those guys, what's the business model around this TV thing? And somebody said, well, we're going to, in between the movies, we're going to put this advert in the middle of the movie. Some movie producer would have gone, you're mad.
Crazy. Yeah.
You're crazy.
Noah, it's been fascinating talking to you.